What is going on, Future Focus Nation? My name is George and I talk about investing on this channel. And today I wanted to talk to you about that $1.9 trillion COVID relief package that has been approved. If you will be receiving one of these checks, the purpose of this video is to give you some tips on how you can invest this money. If you are new to investing, why even invest at all? Well, with all this money that's being printed, the M1 money supply has increased sky high, as you can see right here. And with every dollar that's printed, the current value of the dollar is devalued every single day. Add to that we have inflation every year, and the Federal Reserve has vowed to keep inflation around 2%. That means while your money's sitting in a savings account, it's actually losing money every day. Now, before I give you tips on how to invest in this stimulus check, let's look at the stimulus check from last April and see how your money would have compounded if you would have invested in different assets. Now, this chart right here shows what would have happened to your money if you would have invested that 1,200 stimulus in a few different assets. And before I even show you what the assets are, you can see down here on the bottom right that you actually would have lost money in one of these investments. Now, if you look all the way to the far left, you see that if you would have invested in that secret asset, your money would have gone to 44,800. So by looking at this chart, you can see that it very much matters where you choose to put your money. If you would have instead chosen to spend that money, then you would not have it. And if you would have chosen to put that money in a savings account, you may have gained a little bit of interest. However, that interest would not have beat inflation. So in turn, you would have lost money. But let's look at the first asset. Had you invested your money in gold, you would actually be down now. That $1,200 would have turned into $1,178. Now, this is not a knock against gold. Gold has its place. However, timing plays a great play into whatever you do. Now, what about the indexes? A lot of people end up putting their money in mutual funds and ETFs that mirror the S&P 500 and the NASDAQ. Let's see what your $1,200 would have turned into if you would have invested in those assets. Now, if you would have invested in the NASDAQ and the S&P 500, your $1,200 would have turned into 1,648 and 1,803 respectively, which is not too shabby in 1 year. However, it's not life-changing. Now let's see what would have happened if you would have put your money into one particular stock, one of the most famous stocks, one of the most controversial stocks, Tesla. Last April, if you would have put your money into Tesla, your money would have been sitting at $4,628. Now, last year in April, when the market was unstable, nobody could have predicted that a lot of retail investors would have got together on Wall Street Bets on Reddit and taken over a few stocks. Let's take a look at one of those. If you would have put your money into AMC, your $1,200 would be currently $4,631. What if you would have taken that $1,200 and put it into either one of the two top cryptocurrencies, what most people consider a first generation cryptocurrency and a second generation cryptocurrency? If you would have put your money into any one of these assets, you would be sitting at $9,493 with Bitcoin and $14,403 with Ethereum. As unstable as the markets have been, and as unsure we have been about reopenings and going back to normal, or this being the new normal, it's crazy to see that cryptocurrencies have outperformed gold. However, it would all make sense if you watch the video that I'll post at the end of this video, which is gold versus Bitcoin. Now, we looked at AMC. Now we'll look at another target of the Wall Street Bets investors. Now, if you would have taken that $1,200 and put it into GameStop, because you knew that everything was going to go back to normal and everybody was going to go back inside GameStop, your $1,200 would have turned into $44,288. Now, let us not forget about the ones who got into it late and are still down thousands of dollars. Now, if you would have put your money into this final asset, an asset that I've been bullish on and very vocal on if you've been watching my videos, I even made a part 1 and part 2 speaking on why I was so bullish on this asset. And I'll be releasing a video later on this week why I continue to be bullish on this asset. Drum roll. Without further ado, if you would have put your money into ADA Cardano, your $1,200 would have turned into $44,800, beating GME and every other one of these assets that you see listed here. Now that you've seen that, you can see that an amount like $1,200, which seems minuscule, can turn into an amount that's life-changing. But let's talk about today. What should you do? My first recommendation is pay off debt. If you have a loan or credit card that is taking 5%, 6%, 7%, and in some cases, even in the 20s, in annual percentage rate, that is automatically a loss every single month. That is the average return on investment on the S&P 500. Now, when you have a 5%, 6%, 7% loss every month that's coming out of your pocket, you have to make that in your other investments before you can even start really making money on your money. So my biggest piece of advice would be to pay off all that debt. Now, although I showed you a video of investing in single assets, I wouldn't even tell you to go and put all your money into one single asset. And I wouldn't tell you that because that's not what I do. I personally diversify my portfolio. Using something here like the risk pyramid can help you diversify that portfolio. Where here at the top, the smallest piece, you have your speculative and emerging stocks. The next level, you have your blue chip stocks, real estate investments, and royalty trust. In the next layer, you have your investment grade corporate bonds, government bonds, high grade municipal bonds, and all the way at the bottom, you have your safest ones, which are your savings accounts, your treasuries, CDs, money markets, accounts, and being in cash. Here you have an example of asset allocation, and the way you diversify your portfolio is going to be different for everybody. A lot of it is based on your age and how long you plan to be investing. And the next part is based on how much risk you're willing to take. In this example here, you see that they have a lot in equities, which are stocks. They have 20% in debt. It could be debt relating to their real estate. They have 25% in real estate. They have 5% in gold, and they have 5% in cash. Just to be fully transparent with you, this is my personal portfolio. I have 54% of my portfolio in real estate, and inside that slice, I am only counting the equity. So how much I actually have, which I own, which means I have actually paid off. So in this slice is the paid off house I have, and any equity I have in any other real estate ventures I have. On the bottom left, you can see that I have 31% of my entire investment portfolio in stocks. I have 1% in precious metals. I have 4% in cryptocurrency. I have 2% in venture capital, and I have 8% in cash. And that's gone down as I've invested while the market was down. I usually like to keep anywhere between 10% and 30% in cash. I hope these tips helped. And remember, I'm not a financial advisor. I'm just trying to give you more tools for your toolbox. I hope you got something out of this video. I feel that I can learn from you as well. So if you have something different that you're doing with your money, let us know in the comments below. I'm very interested. If you want to watch part 1 of my video on Cardano, press this link right here if you want to learn more about it. Or if you'd rather watch Bitcoin versus gold, press this link right here. As always, invest in me and press that like button, invest in yourself, and smash that subscribe button. Until next time.